European and U.S. stock markets climbing today on optimism. The Greek Prime Minister George Papandreou will win today's confidence vote, which could help Greece avoid default on its debt, at least for now. Billions of dollars have already been spent to bail out Greece and Ireland. So is this optimism justified? Joining us now with his outlook is Gary Shilling, president of A. Gary Shilling & Company, an economic research firm. In early 2009, he forecast the global financial crisis. In 2008, he forecast the global financial crisis, and before that as well. Gary, welcome to the program. Thanks for joining us. Let me ask you, first of all, you and I were just chatting about it during the break. Does it matter if George Papandreou wins the opportunity to kick the can further down the road?
No, not really. And I think what's going on there is that everybody, and including the Germans, are trying to figure out a way that they can save face and bail out Greece once again. And, as they say, kick the can down the road. But
why even bother is what I'm wondering, because you're going to come to the same point again next year or in 2 or 3 years, right?
Well, because the option is to do nothing, and then Greece and probably Ireland, Portugal, and maybe Spain would leave the Eurozone, the euro currency, and that would be the end of the noble experiment post-World War. Because after the war, the French and the Germans got together and they said, we got to figure out a way to communicate that's different than what we've done in the last 150 years, which is all-out war. And they said, if we can get the economies integrated, we'll reduce the chances of war. And that led to ultimately the Eurozone. Now, if the Eurozone falls apart, that's the end of that grand experiment. And I don't think anybody, particularly in the Teutonic North, which has been supporting the Club Med South, I don't think they really want to go that route. So I think they'll keep doing it one way or the other.
We hope not that this doesn't end in World War III, obviously. But is there any chance that the Greeks can indeed cut spending, raise revenue, and get in line with the rest of Europe?
Without a population transfer, I would say probably not. The Greek temperament and culture does not seem very amenable to that kind of thing, selling off all these state monopolies in shipping and in gambling and so on. Would they really sell them off, or would they just transfer who gets the graft and corruption? I mean, you know, that sounds brutal, but I think it's being realistic. And would they change their temperament? Would people start voluntarily paying a much higher percentage of their taxes and so on? The temperament isn't there, and you know, the Greeks know. The Greeks know that the Germans are very concerned about this. So who's got the gun in this case? The Greeks probably have more power than the Germans, ironically, because their threat is we're gonna kiss off the Eurozone and pull out, and then you're stuck with a failed experiment post World War II.
But what happens then eventually? Does it come to that next year or in 2 or 3 years?
Yeah, I think they're, as I say, I think they're trying to save face by figuring out a way that they can. Again, kick the can down the road. The idea now is the privatization in Greece, but of course they've also got the problem of avoiding default, which would be defined in terms of the credit default swaps, whether to trigger them, and of course the rating agencies. So they got some serious problems. They got to figure this out. But no, it doesn't solve anything. And eventually, you say they're going to have to restructure, but you know, politicians take the attitude that's going to be after I retire. That's the next regime's problem.
Well, we have the same kind of politicians here in the U.S., don't we? Because I'm sure that you don't think we'll be able to cut spending and raise revenue enough to avoid having to at least inflate our way out of the debt crisis that we're in.
Well, I don't know if we're going to consciously inflate our way out. I've never heard any politicians in Washington over many decades ever say they would deliberately use inflation.
Although they do it by neglect, don't they?
Well, they might do it by neglect, but you know, I'm looking more for deflation than inflation. But in any event, we do have a situation here where, in our view, with continued slow economic growth, 2%, it takes 3.3% economic growth just to keep the unemployment rate stable. And if we have 2%, the unemployment rate will rise chronically about 1 percentage point a year. In other words, you're 9.1, it goes to 10.1, 11.2, and so on. And no government, left, right, or center, can stand for high and chronically rising unemployment. So I think we're going to have trillion-dollar deficits in the foreseeable future because there's pressure to create jobs.
All right, so you have obviously a bleak and bearish view, and you and I talk about this all the time. But people pay you, though, to help them invest their money and at least preserve capital. What are you recommending that people do right now with their assets?
Well, I like 30-year Treasuries. Now, everybody thought that with the end of QE2, that was the end of Treasuries, but they've been rallying since March, and everybody knew that that the odds of a QE3 were pretty limited. And I think it's telling us that the economy is weak, that the commodity bubble is over. I think that's the commodity declines are telling us that China's going to have a hard landing. I think the treasuries are a safe haven. And there's a lot of people out there who don't have much in the way of alternative investments. So I like treasuries. I like the dollar. Dollar's been beaten up. I'm not sure why the euro hasn't fallen apart yet, but I think it will.
That's a discussion that we're going to have after the bell. Gary, we appreciate you stopping by. Thanks very much. Pleasure as always. Gary Shilling there from A. Gary Shilling and Company. Now we